Hello, and thank you for tuning in to the MacDesk Floor Report for Tuesday, September 6th. I'm Rebecca Darst from the MacDesk, speaking to you from the floor of the exchange, where once again we are in sell-off mode today, volatility not taking a vacation for the Labor Day holiday. We had European markets sharply lower overnight as U.S. stock and bond markets were closed for the Labor Day holiday. The selling didn't slow much in Europe, in fact, until this morning when the Swiss National Bank announced an aggressive monetary intervention overnight, setting a 120 peg against the euro. U.S. stocks have been under pressure ever since the pre-market. We're down 260 points right now, despite a better-than-expected ISM number. Across the board, if you look at asset classes, our concerns are global macro growth. Oil prices down around 2%. Gold approaching a new high at $1,900 per ounce. The yield on the 10-year bond touched its lowest level in 60 years earlier today, around 1.90%. We're now right around 1.94%. The VIX is up about 14% at 38.79. Note that Goldman was out this morning with a note putting a fair value for the VIX at right around 42.43. As far as catalysts for the market action this week, we're looking at a key ruling on Eurozone bailouts due out of Germany on Wednesday. German Constitutional Court ruling on the legality of that Greek bailout. And we have Obama's jobs plan due out on Thursday. So what does it all mean for the market here in the U.S.? For additional market insights, I'm joined by longtime floor veteran Dave Henderson. Dave, what does this market want to see out of Europe, since obviously so much of the sell-off is coming out of, emanating from Europe?
Yeah, definitely. Rebecca, you summed it all up pretty well. I mean, this German thing that they're going to vote on Wednesday, we're going to see where, they're the strong horse over there. They've been the leaders over there. If they, say something negative or whatever, it's going to be interpreted in a very poor way. So
many market observers are saying that Europe is headed toward a Lehman moment. So what do you think is the Lehman moment?
Well, that's what we got to wait for and see how the Germans do vote on this thing in their parliament. And hopefully they're going to, take it and bite, the ball by the chain or whatever it is and go for it and be the leader over there and try to get out of this mess that they've been in. They're not going to solve it overnight, but it's something, they need to know that the rest of the country or Europe needs to know that they have the support of the Germans behind them.
So traditionally, September and October are known as very volatile months for U.S. equities, but we had such a volatile August. Do you think that's taken some of the bite out of the downside volatility we might be seeing?
Wouldn't we all wish that? But no, I don't think so. No, I think it's going to continue for quite some time because there's still a lot of anxiety out there and a lot of people are fearful. You can just see it in the gold market. You can see it in the oil market even. Oil is showing us that there's probably going to be less growth going forward, and that's scaring people a little bit. So they're worried about what's going on over in Europe. They're worried about the growth factor here, so they're buying gold for safety precautions. And the market, in September and August, what we already had, we went through, was terrible. And generally, you get the most volatility in September and October. So you got to hang in there.
So how about the Obama jobs plan? This is due to be unveiled on Thursday. Do you think is that going to be a market mover one way or the other? What are we discounting here?
I think some people are very fearful that he's going to probably stick to his game plan and say the same things that we've heard over and over again. He's going to want to tax the wealthy even more probably. He's going to say something like that. He's going to want to go after the oil companies, something along those lines. And I think, close some loopholes that still exist out there in the tax world. But hopefully I'm wrong. And hopefully he is going to say something more encouraging so that corporate America can get back on their feet and try to grow and try to move forward.
Well, you heard it here first. That's it for today's floor report. For additional market insights, check your inbox at 1 p.m. for the midday. For now, I'm Rebecca Darst for the MacDesk.